Hello, my creative friends. Does sales tax totally stress you out? Are you sure if you should be collecting sales tax or not? And if you are, where do you report it? How do you register? Sales tax can be super confusing and it's different in every state. In this video, I'm going to show you the basics that you need to understand about sales tax and give you the resources to look up your state's sales tax laws and how they affect you and your business. So go ahead, click like, and let's dive in. What is sales tax? Sales tax is a tax placed on consumers by their state and local government. How does sales tax work? Sales tax is charged to the consumer. It's a percent added to the price of a product. The seller is responsible for calculating sales tax, collecting it from consumers, filing with the state, and remitting the funds to state and local government. States and local governments use that money to fund things like schools, parks, roads, and special projects. There's no federal sales tax. In the United States, sales tax only exists on state and local government levels. How can you figure out if you even need to deal with sales tax at all? This is the process. For any state you have sales in, you need to figure out two things, and in this order. Is what you're selling a taxable item in that state? If it's not a taxable item, then you can proceed as usual and invoice the client without sales tax. If it is a taxable item, you then need to figure out the next step. Do you have sales tax nexus in that state? If you don't have sales tax nexus in that state, you have nothing to worry about, and you could proceed as usual and invoice the client without sales tax. If you do have sales tax nexus in that state, you need to register with the state to collect and file sales tax. You'll also need to add sales tax to your invoices for your clients. What are taxable items? In general, most states tax tangible goods, meaning physical items you can touch. For example, a wedding album, a thumb drive, or a custom designed t-shirt. Some states tax services. New Mexico, Hawaii, West Virginia, and South Dakota broadly tax most services. 20 other states tax certain services. You can see why it's so important to make sure you understand each state's rules. How do you know which rate to charge? Sales tax rates vary across states, cities, counties, and local areas. You may have to calculate a mixed sales tax rate. For example, I'm in Buffalo, New York, so sales tax for the state of New York is 4%, and in Erie County, where I live, the county sales tax is 4.75%. So that's a total of 8.75%. Where when I report, 4% goes to the state and 4.75% goes to my local county. I know it sounds a little bit crazy. So how do you register? You can start with looking up sales tax laws for your state. Every state has a website that includes taxation information for individuals and for businesses. I have included a link in your resource area to the IRS listing of all state websites for your convenience. You'll need to find the state that you want to navigate to. Then you'll find the sales tax portion of their site. Each state has a publication that goes into detail explaining when you have to register to collect sales tax, how you figure out what rate you're using, and how often you'll need to file and pay. If you cannot determine if you need to be collecting sales tax or you're just not sure how to file, call the state. When I'm working with a new client in a particular state and it's not clear to either of us if they need to be collecting sales tax, I will pick up the phone and call. I'll explain the business, what they sell, how they sell it, and get direct guidance from that state's sales tax office as to what we need to be doing. This is a valuable resource. You should use it, and it's free. Talking directly to the state will remove any doubt of what you should be doing to stay compliant. But now I bet you're wondering, what the heck is Nexus? We spoke about in the previous slides. Nexus is just a fancy way of saying significant presence in a state. If you have sales tax nexus in a state, then you have to register, calculate, and collect sales tax. Nexus is an easy concept to understand, but determining what activities or thresholds trigger nexus in each state can be a little bit challenging, as rules vary widely from state to state. Let's look at some examples of sales tax nexus. Physical presence. One of the most basic nexus rules is that if your business has a physical presence in a state, you'll be required to collect and remit sales tax there. It's relatively simple if your business is located in a particular state and you only have sales within that state. Then you only collect and remit your home state sales tax. However, if you have locations of your business in multiple states, you may create Nexus in each of those states. This can apply to branches, stores, warehouses, drop shipping facilities, or any real estate or property that belongs to your business in another state. Delivery and distribution. As long as you ship goods to customers by a common carrier such as USPS, UPS, or FedEx, you're unlikely to trigger a sales tax obligation through delivery, but you'll need to check each state carefully. In some cases, however, the use of a drop shipper or contract with a distribution company that functions as a drop shipper is considered a taxable nexus, creating activity in some states. Employee location. Nexus can also be created if you have employees in a different state, or if employees or contractors conduct any work at a customer's out-of-state location or deliver products in another state on your behalf. Nexus may apply. Event attendance. Regularly attending trade shows in other jurisdictions beyond the physical location of a business can also be considered Nexus in certain states. Advertising and affiliates. If you advertise online or use affiliates to get business, you may trigger Nexus. When a business in another state sends customers to your business through links on a website, this can create Nexus in the originating state, according to the affiliate or click-through Nexus laws. You can see how this starts to get a little overwhelming. And in the summer of 2018, we have a new Nexus trigger to make everything more interesting. Economic presence. This is a new one, and you may have heard some things about it on the internet or in social media, where the Supreme Court case of South Dakota versus Wayfair. On June 21, 2018, the Supreme Court enacted the economic nexus requirement. This removes the requirement to have a physical presence in a state to create sales tax nexus. There's new criteria that will trigger sales tax nexus based on sales and transactions in a particular state. Let's look at some examples of economic presence. For example, California has added economic nexus. This puts California's threshold at $100,000 or more of sales in the state of California, or more than 200 transactions in the previous or current calendar year. So this means if you are selling to someone taxable goods in the state of California, even if you live in, say, New York, if you are meeting the threshold of $100,000 or more in sales or 200 transactions in the previous or current calendar year, you may have to charge sales tax on California transactions. Let's look at another one. Connecticut. Connecticut has a threshold of $250,000 or more in sales. Instead of or, they say and 200 or more transactions in the previous calendar year. So you can see how this is a little bit different than California. So Connecticut wants you to have sales of $250,000 or more and 200 transactions. So you have to meet both criteria to trigger economic nexus in Connecticut. So let's back out and look at a high level of sales tax. You can see here, 45 states have sales tax. These are the purple states. There are only 5 states without sales tax, and those are represented in gold. And that's Alaska, Delaware, Montana, New Hampshire, and Oregon. Of those 45 states, 36 of them have already adopted economic nexus, and more states are adopting it as we go along. You can see how the laws vary state to state. That's why it's so important to understand sales tax laws and nexus for the states you have sales in. I have included links in the resource area of this module that go through the details of economic nexus for each state that has adopted it and some details on those that are in the works of adopting it. And why is all of this sales tax business so important? Because non-compliance can cost you. States do not mess around when it comes to non-compliance. You could end up owing large amounts of penalties and fines, not to mention back sales tax if unpaid. They can shut your business down. They can put a lien on your business or personal accounts based on your business entity. You could go to jail, We're talking directly to jail, do not pass go, do not collect $200 kind of jail time. This is serious. It's crucial you understand the sales tax laws of any states that you do business in. I hope that shed some light on this topic for you. If you're interested in learning more about these types of topics, I'd love for you to join my free Facebook community. You'll find the link down below in the description for this video. I hope to see you there. Don't forget to subscribe.